Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Shanghai Fudan-Zhangjiang Bio-Pharmaceutical Co.Ltd. Annual Report. Shanghai Fudan-Zhangjiang Bio-Pharmaceutical Co.Ltd. offers a diverse range of businesses and services in the biopharmaceutical industry. The company's primary focus lies in the research, development, manufacture, and sale of biopharmaceutical products. The company provides various types of drugs through its genetic engineering platform, including Trop-2 N38 ADC for triple-negative breast cancer, CD30D Mon antibody drug conjugate, ADC, for tumors, and He-Art-Wo AG for tumors. Additionally, it offers photodynamic technical platform drugs, such as hemorphin for port wine stain, and aminolevulinic acid CIN for cervical diseases infected by HPV. Shanghai Fudan-Zhangjiang Biopharmaceutical Co.Ltd. also develops pharmaceuticals and medical devices through its osmotic pump technology platform, including controlled-release carbidopa/levodopa tablets for early Parkinson's disease and obticolic acid for hepatobiliary/autoimmune diseases. Furthermore, the company engages in various other activities such as technology development, transfer, consulting, and promotion. It also provides medical diagnostic products and related services, sells daily necessities, and offers clinical laboratory analysis instruments and software. Shanghai Fudan-Zhangjiang Biopharmaceutical Co.Ltd. maintains a market capitalization of $8 billion, broadly in line with the industry peer group. Shanghai Fudan-Zhangjiang Biopharmaceutical Co.Ltd. trades at a higher price-to-book ratio of 1.17 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation, signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 11% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, the sales of pharmaceutical and diagnostic products have increased by 2% from 2024 to 2025. Additionally, technical services have seen a significant surge in demand, rising by 101.1%. The introduction of new products such as aminolevulinic acid, hydrochloride topical powder, ALA, and hemorphin for injection, Fumei-Da, has also contributed to revenue growth. These innovative products have filled gaps in treatment options and have been well received due to their effectiveness. Furthermore, the development and advancement of photosensitive substances have led to increased demand for photodynamic therapy, which is effective in treating tumors and benign diseases. This trend is expected to continue, driving revenue growth. On the other hand, several factors have contributed to revenue decline. The decrease in market retail price has had a negative impact on sales, while the failure of LIBO to be selected for centralized procurement may also affect sales strategy. Additionally, the loss of core technical personnel and limited product types have led to significant declines in performance of major products. The company's increased investment in R&D is also a contributing factor to revenue decline, as it has resulted in higher costs. Furthermore, changes in market conditions and competition have negatively impacted product sales performance. Overall, these factors highlight the complexities involved in driving revenue growth or decline, and the need for strategic planning and adaptation to changing market conditions. The net income of the company underwent a significant decline between 2024 and 2025. The net income decreased by RMB 197,157,650 from a profit of RMB 434,072 in 2024 to a loss of RMB 157,723,578 in 2025. This represents a staggering decrease of 466.3% year-over-year. The decline in net income was accompanied by a reduction in profit margins. The operating profit margin decreased from 0.34% in 2024 to minus 0.23% in 2025, while the net profit margin dropped from 0.63% to minus 0.23%. These decreases were largely due to reduced market retail price reductions and volume-based procurement of generic drugs. The company's financial performance was severely impacted by these factors, leading to a significant decline in its bottom line. The decrease in net income and profit margins highlights the challenges faced by the company in 2025, which will require careful analysis and strategic planning to address. The company's financial performance indicates a significant improvement in its ability to generate cash. According to the provided summary, the company is generating positive operating cash flow, which is a crucial indicator of a company's financial health. A closer look at the numbers reveals that the net cash flows from operating activities for 2025 amount to RMB 141,398,255. This substantial figure demonstrates the company's ability to generate sufficient cash from its core operations, indicating a strong and stable financial position. The company's interest expenses have shown a consistent increase over the past few years. According to the extracted summaries, interest expenses rose by 12.3% from $591,615 to $662,894 on multiple occasions. This indicates a notable increase in the company's interest payments. However, when examining the debt level, there is no clear indication of a significant change. The net debt remains zero in both years, and while accounts payable decreased, other payables increased, and lease liabilities decreased, these changes do not appear to have had a substantial impact on the overall debt level. Management's vision for the company's future is centered around several key strategies. Firstly, they aim to expand the clinical indications of existing drugs and develop new photosensitive compounds and supporting medical devices, page 118. This will enable the company to improve patient outcomes in high-grade glioma patients and reduce recurrence rates in non-muscular invasive bladder cancer through enhanced detection and removal of tumors, page 120. To achieve these goals, management plans to strengthen the company's core technology advantages, diversify its product catalog, and promote the commercialization of R&D achievements, page 127. This will involve investing in Shanghai Handu for its growth potential in drug R&D capabilities, page 134, and constructing a Phase II pharmaceutical production-based project with an investment of RMB 600 million, page 135. The company's outlook is also influenced by the global pharmaceutical market, which is growing steadily due to demographic changes and advancements in medical technologies, page 129. China's pharmaceutical industry is undergoing rapid differentiation and structural upgrades, presenting opportunities for growth. Management emphasizes the importance of original innovation and high-quality development, with a focus on enhancing compliance management levels and product quality standards, page 147. Overall, the company has a good outlook due to its commitment to information disclosure and corporate governance measures, page 190. With these strategies in place, management is confident that the company will continue to grow and thrive in the future. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would be worth mentioning. This lack of activity suggests a stable and focused approach to business operations, with the company choosing to maintain its current structure and resources. The company has a history of paying dividends to its shareholders. According to the provided references, the company has declared and distributed dividend payments in various years, including 2024 and 2025. Specifically, it is noted that RMB 93,291,489 was paid out as dividends in 2024, and RMB 31,097,163 was paid out in 2025. These payments are mentioned across multiple pages of the document, further emphasizing the company's commitment to returning value to its shareholders through dividend distributions. Concerns have been raised regarding inventory buildup based on several key indicators. Firstly, a significant discrepancy is observed between cash paid for goods and services and cash received from sales, as noted on page 11. This suggests that the company may be accumulating excess inventory. Furthermore, an examination of stock inventories reveals substantial increases in raw materials and goods in stock from 2024 to 2025, with values rising by RMB 16,478,807 and RMB 26,536,002 respectively. Additionally, finished goods and work-in-progress inventory levels have seen a notable increase of plus 11,416,896 compared to the previous year's decrease of minus 7,758,948. The cost of sales from main operations has also experienced a substantial rise of 62.5% in 2025 compared to 2024, which may indicate an inventory buildup. These indicators collectively point towards concerns about inventory buildup, but there are no signs of supply chain disruption mentioned in the provided summaries. That concludes the financial summary for Shanghai Fudan-Zhangjiang Bio-Pharmaceutical Co.Ltd. Feel free to comment below, and I will be happy to answer them when possible.